1, International Regulatory Environments for Audit and Assurance Services. And the way that the chapter is organised is by starting out with a series of what we call syllabus learning outcomes. And these are the specific areas that the ACCA has identified for you to be aware of, so that questions will be set on those areas and you will then be examined on them quite literally within the exam itself. So you'll see a list on every front page of every chapter of syllabus guide detailed outcomes, and then we'll get some examples of how each of these different syllabus outcomes has been examined and which particular past paper you will have been able to find them in. So for this chapter, for example, the key thing we're going to focus upon will be the importance of things such as laws and regulations and money laundering. Let's have a think about how the chapter's organised, and we'll have a look at the overview diagram. So as I mentioned in the introduction to this particular chapter, we're going to look at three main areas. Given that our focus is on regulatory environments for audit and assurance services, we're going to focus especially on the fact that there are international elements and flavours to this. As far as the major elements of regulation is concerned, though, moving across to the right-hand side, we'll have a look at our first introduction to an ISA, which is ISA 250. This is the consideration of laws and regulations in an audit of financial statements. But probably of most importance to you in terms of the exam will be what you need to know in respect of money laundering. It's by far the most frequently examined of the subjects that are included within this chapter. So we'll talk a little bit about what we understand by money laundering, how you can commit it, and most importantly what the ACCA says professional accountants in the 21st century should do to try and counteract these threats. If you're ready, let's dive in and have a look at section 1. So we start by looking at the international regulatory environment. You'll find that there's more information included within your study text, which will give you some more background on things such as ISAs, International Standards on Auditing, and perhaps some other laws and regulations that you're going to be able to consider as you go further through this. You're also going to need to know a little bit about the best practice elements, and to a certain extent some of that is pretty much evolving as we're going through. What you'll also find within the notes that we will be dealing with in more detail through these presentations is lecture examples, which are replicated in the course notes in front of you. And what you find with a lecture example is it's an opportunity to be able to perhaps bring in a subject for discussion in a bit more detail to generate ideas. For example, that's exactly what we're going to do with this one in a second. It might also be to illustrate a technique that you might need for the exam, or to perhaps get you to practice something that you've already been shown so that you can see how best to apply it if it comes up in the exam. So what we're going to have a quick think about firstly is factors that might have led to the growth in regulation of the audit profession. Now, the timescale you choose to go back on is often governed by a question or a scenario, but in this instance this is merely just to introduce the idea of how the rules of the game have been laid out for us. One of the things that we could start to talk about impacting upon our need not just to be regulated but perhaps to be seen to be regulated is recent instances of impact on our reputation. Sadly, many of them being negative impacts on our reputation. And we know of plenty of examples of companies such as Enron. Perhaps more recently we've had instances of companies such as Satyam in India, where significant financial fraud was perpetrated and is still ongoing as a case. In both of these instances, there have been question marks raised about things such as the integrity of the professional services firms that have been involved, and whether auditors have been more interested in taking the fees rather than standing up for what they felt was right in terms of disclosure. We could also talk very strongly about the financial crisis that has gripped the globe since 2008, where a number of questions in respect of the amount of validity, if you like, of assumptions underpinning financial statements and the aspects of risk were not questioned as fully as perhaps they might have been, and the audit profession is perceived to be in need of an upgrade in terms of its perception of what's right and what's wrong, what it should be saying and what it should not be saying. We're going to explore this in a bit more detail as we go further through the course, so this is more of an intro than anything else. Now, you might be curious to find that already first part of the first chapter of P7 and you're being asked to try and consider things from a larger scale, real world perspective. Remember, this is a paper that's sat pretty much before you finish your exams, and the expectation is that by now you should have a fairly good idea of the way the world works. So don't be frightened of flying a few kites and coming up with a few ideas about what the world and what the profession we have should be doing. While we think about the world in general, it brings us perhaps to the second major issue, which has a knock-on effect upon why we feel our profession needs to be regulated. If you like, the growth in this regulation is the nature of the audit profession's scope of work these days, which is far more global if we consider the size of companies and perhaps the impact on, I'm going to use a shortcut phrase here, stakeholders as opposed to just simply shareholders. And obviously we've seen instances of the financial crisis mentioned further up here, which has a knock-on effect upon our impact as professionals. Are we doing a job for society, for example? Remember, the idea of a professional is that you are acting in the public interest. Have we always done that? The global nature of it in terms of the fact that it's a size, but also perhaps the variability that we know about, also in terms of things such as laws, which we kind of go back up here to discuss as well. Now, we could talk about this in more detail for far longer than we've got to be able to discuss at this stage. The solutions to all of the lecture examples are made available to you at the back of the notes, so you should always make sure you're comfortable with these, but this is just by way of an opener. Remember, P7 is trying to get us aware of the risks, if you like, attached to being an audit professional, an assurance professional as well. And in many respects, you're going to view this from a different perspective. At F8, you would have looked at this particular course as if you were the audit junior or a member of the team. At P7, you're going to be looking at it very much from a different perspective, that of the audit senior manager, for example, possibly even the partner of the firm, where you're thinking about all the risks that are attached to any particular type of engagement. Let's consider section 2 now and move on to money laundering. Remember, the definition of money laundering is given in part 2.1. It's the process by which criminals attempt to conceal the true origin and ownership of the proceeds of their criminal activity, allowing them to maintain control over the proceeds and ultimately providing a cover for their sources of income. The diagram shows this in perhaps more brief detail. Ultimately, the collection of dirty money from a variety of sources, such as drug trafficking, extortion, bribery, and possibly even the counterfeit copying of things like DVDs, leads to a significant amount of money which needs to be legitimised. Through a complex series of transfers, the money is integrated back into society without the authorities being able to trace its true source, leading, bottom left-hand side of the page, to the Grand Theft Auto-style lifestyle that the money launderer and his or her counterparts will be able to enjoy seemingly legitimately. So having considered money laundering and how we define it, a little bit about the process of how it works, we need to think a little bit about what to do about it really, including some of the offences that are carried out. Now, because it's a global issue, it's been taken on by a global body which is attempting to try and knit together all the various different types of legislation and approaches towards dealing with money laundering. And you can see that across the page there's a number of different approaches that need to be taken into consideration. This is where the accountant has to be extremely careful in terms of knowing what the offences are, because in some instances they can be quite honestly and innocently breached, and the professional services firm could actually find themselves in pretty hot water when all they've really tried to do is something that's in the best interest of their client. So it's anything to do with criminal property, possessing it, dealing with, or even concealing it. Quite often that's very difficult, so a lot of the time the criminal property that might be arriving as far as the accountant is concerned in good faith might actually be the proceeds of crime. We have to be careful, obviously, that if we do find ourselves aware of something, that we report it. But again, this is the other critical area where there is a big problem. Tipping off clients is tantamount to saying to them, okay, we know that we're onto you, you know that we're onto you, and saying to the criminal, basically, off you go, you have a head start, I'm sure the cops won't be able to catch you. The problem is, obviously, again, it's a case of visibility and it's a case of knowledge, and what the accountant finds himself is, again, in all good faith, taking on clients who they might feel are genuinely legitimate, but who represent the proceeds of crime without the accountant knowing about them. The accountant finds out, the accountant unwillingly and unwittingly tips off the client by saying, hang on a minute, can I just have a bit more information about where you got your funds from, Mr. X, Mrs. Y, etc. So consequently, there's a lot of very tricky areas to have to try and factor in. And at the end of the day, let's get down to it. In the 21st century, these types of frauds are actually quite sophisticated, and we're dealing with people who are running significant sums of money through their books. And as a result of that, they'll do all sorts of things to try and keep them either on the face of it legitimate and to keep themselves in business. albeit bad business. So, there's a huge amount of guidance that needs to be considered. We're going to think about it from an ethical point of view later on. There's a huge amount of guidance that needs to be considered, and the ACCA has done its bit in producing this for you. So the box gives us a little bit more information in respect to this. Big part of this is internal controls and policies to make sure that each of the members of the firm know exactly what it is they're supposed to be aware of. Regular training, you yourself might actually be subject to that as part of your employment, for example. And a big part of this is the identification of clients, both before and during engagements and possibly even retrospectively afterwards, knowing exactly who it is you're dealing with, making sure that you aren't actually helping to harbour the proceeds of crime. Anything in terms of understanding problems or issues goes through the designated Money Laundering Reporting Officer, or MLRO, within the company. Now, in terms of identifying particular work as far as clients is concerned, it all comes under the banner of what we call this Know Your Client, or KYC information. All information in respect of clients needs to be maintained. You can see here for 5 years, and anything that might escalate you from a general interest into your client's work into perhaps being concerned that it might actually then be a case of money laundering. Hugely careful that the professional accountant has to be aware, making sure that they've maintained all information, because ultimately it could end up becoming evidence in a court of law. The recognition of this suspicion is where we have the difficulty and the problem that we have to think about. And the big issue is making sure that you're aware of what the possibility is. It doesn't necessarily have to be firm evidence, but it has to be something more than just simple speculation. But again, once you have that suspicion, you have to be very careful what you do and how you do it. You report your findings promptly to the MLRO, but you have to be careful not to tip the client off, because ultimately that is a criminal offence in its own right. Now, you may be 1 or 2 steps ahead of the game in this instance by asking, why is it we need to be aware of this, and why do we need ethical guidance? Well, obviously it's quite tricky. You're going to need to have a think a little bit about this. I'm going to give you a little bit of time just to try and think about what ethically might be the issue as far as the accountant is concerned in respect of guidance on money laundering. What I'll do is I'll give you a little bit of time. Remember, with these presentations, you can pause them, you can rewind them, you can replay them, you can do whatever you like. What I would suggest is that you pause this now and have a quick think about what might be the answer to this, and then try and think of some ideas yourself, and then press play when you're ready to go, and we'll go through it together. Okay, welcome back. Let's see how you've got on. We asked beforehand why we felt there was a need for ethical guidance for accountants in respect of money laundering. And I think a big part of this is because there is, as you can see from the previous table, quite a lot of crossover and quite a lot of danger and risk about differentiating between deliberately trying to assist in a money laundering instance and accidentally assisting. And as a result of that, the professional accountant needs to know exactly where to tread the line. Secondly, you'll see the issue that we touched upon in the first lecture example, which is about reputation, where the reputation of our firm and our profession in general is obviously a very high profile, and we have an extremely tricky balancing act to be able to strike up. Many of our clients will come quite legitimately to us simply for anonymity, purely and simply for a lot of commercial and other reasons, where their funds may be totally legitimately sourced and obtained, but they don't want questions being asked for various reasons. Now, traditionally, the accountant has suffered as a result of this. The governments have attempted to try and block off the approach by, instead of saying to the accountant, I don't care what you're telling me, that I should trust what you say, I want you to actually prove that you can be trusted now, and show me, because there have been too many instances where we've left you to your own devices and you've ended up doing things which haven't been entirely completely accurate or completely legal. So we have a significant barrier, if you like, to break down in terms of public perception, between the perception of the public that we can't be trusted, and that in the past we've abused that authority, but that we still want to maintain that sense of trust through the veil of confidentiality that we provide to our clients. So that's where it becomes very, very tricky, so that we act in the right way, that we act in the public interest, but we maintain it with a commercial edge to it. Okay, we come to the final section within this chapter, which is in respect of the impact that laws and regulations have on the audit. Now, basically, anything to do with laws and regulations, the non-compliance thereof is likely to be an issue as far as anything else that's got to be fulfilled or run in the context of law or best practice. So we have to be mindful of us as auditors and what it actually means to us if we encounter any instances of breaches of law or best practice in terms of regulations. So, is it all our fault? Is it entirely up to us as auditors to ensure non-compliance occurs? Do we have to be legal experts? Well, the good thing is that in reality, the standard gives us some fairly clear-cut definitions of who is responsible for what. If we scroll down here, we can see that there is a specific series of responsibilities that both management and auditors have to consider, and we'll have a look through each of these now. And the good thing is that this clarifies it, especially in the context of what you're going to see later on when we talk about the expectations gap, the difference between what society believes auditors should do and what auditors actually should do. And this is a really, really good way of narrowing that gap. You can see from this section here, it is management's responsibility to ensure that the entity's operations are conducted in accordance with laws and regs, not the auditors. The responsibility for prevention and detection also rests with management. Now, in order to help them undertake this process of both prevention and detection of non-compliance, there are a number of different processes that they could get involved in, for example, such as monitoring certain legal requirements, for example, considering whether or not the internal controls they have in place are adequate. A good way of considering the applicability of laws and regulations and how they are put into practice within a business is to consider a code of conduct, for example, making sure that employees know what the code of conduct is, monitoring degrees of compliance, for example, and possibly even looking to find very visible ways of disciplining those people who transgress from that code to encourage adequate compliance. Good way of business understanding the laws and regulations it faces is to consider employing legal advisors who understand, plus also some sort of regular risk and some sort of regular register of significant laws and regulations in the same way as you would have with a risk register, for example. And it's quite good to point out that when we think about good governance arrangements, from larger organisations' points of view, things such as internal audit functions, audit committees and compliance functions themselves specifically might also be a good way of determining exactly what it is the business needs to be thinking about in respect of this level of compliance. So does this mean that the auditor has absolutely no responsibilities in respect of laws and regulations? Unfortunately not. Whilst it says at the beginning here the auditor is not and cannot be held responsible for preventing non-compliance, the audit carried out does act as some sort of deterrent, the auditor needs to be mindful of the impact in respect of any non-compliance in order to be able to deliver their opinion. Basically, if the auditor is aware of instances of non-compliance, it can't necessarily state that the financial statements have been conducted in accordance with the way the audit should be undertaken, especially if compliance with things like the Companies Act in the United Kingdom, for example, is a significant part of your ability of discharging your duties. As with everything else, the auditor has to plan and perform in order to obtain sufficient appropriate evidence that no instances of non-compliance have occurred. Now, whilst not needing to be a legal expert, it is important for the auditor to understand enough about the legal framework to see whether or not there are any significant instances of non-compliance. Obviously, if anything else occurs which has a knock-on effect upon the audit, then the auditor has to bear that in mind. And considering whether or not there is a need for other testing is one of the key parts that ISO 250, which is the audit standard in this instance, takes into consideration. Understandably, any instances of non-compliance that have occurred, it's entirely up to the auditor to ensure that they've got sufficient information in order to be able to consider whether this is a breach that is very obvious or a breach that they're uncertain about. They need to find out as much information as possible because their opinion mustn't be jeopardised as a result of this. Any instances of material non-compliance in respect of this should be reported to those people charged with governance. Obviously, breaches of laws and regulations by directors themselves might need to be taken to a high level of authority, for example, somebody within the audit committee, the senior independent director, for example, or possibly even stakeholder groups. There may need to be some sort of legal challenge in respect of this as well. That's a difficulty that the audit has to take into consideration at different stages. Whether or not law has been broken, well, that's going to be dependent upon how good your knowledge is, and frequently accounting firms do get involved with affiliations of some sort with businesses like law firms that can help them understand the implications in respect of things like breaking statute, the implications of case law, and even things such as regulations. Although it's fair to say that as far as what you've seen already in this chapter, as far as regulations like money laundering, for example, there are significant impacts, especially as well in the things like the financial services sector, where the accountant actually should really know this sort of thing anyway. Now, what happens in the instance of a breach of laws and regulations having an impact upon the audit and therefore the audit report? Well, it will depend upon what sort of breach you've seen. If we've seen an instance of a literal break of the law or break of best practice where something has actually happened and it has been maybe a legal requirement to record things in a certain way and that hasn't occurred, quite simplistically you might say for things from a disclosure point of view, for example, if we're thinking about a UK set of financial statements, if that material misstatement is a misstatement that is material and the directors refuse to amend this fairly straightforwardly, it's going to be a choice of in the event of that material but not pervasive statement, a qualified opinion, or if it's material and pervasive, an adverse opinion. Obviously, we'll talk more about that when we get to later chapters. If, however, we find that the breach of laws and regulations has, for example, precluded certain bits of evidence from being recorded in the first place, insufficient records, you might say, well, we don't have enough information. And again, the Companies Act in the UK specifies that certain accounting records have been kept, for example. Had these not been kept, you would then say, well, our opinion is qualified, or in significant cases, material and pervasive cases, we say we don't give an opinion because there's so much that's wrong. I mentioned to you before that there's always the possibility that things could be so bad that you can't deal with this and you have to walk away from the engagement. Obviously, as it says here, you should view this as a last resort, but legal action does need to be borne in mind as to whether this is satisfactory or not. At the end of each chapter, you'll find a summary which goes through each of the sections covered. For the international regulatory environments for audit and assurance services, we see in section 1 just that, a quick overview of the laws and regulations that are in place to try and govern and maintain the reputation of our profession. Secondly, in money laundering, we talked about the various offences as well as what money laundering actually is. We also discussed how difficult it can be for auditors and accountants to differentiate between those accidental breaches and those deliberate breaches of the money laundering guidelines, and we discussed the ethical guidance that's in place. Finally, in section 3, we discussed ISA 250 and the importance of laws and regulations as part of the audit of a set of financial statements, and we discussed the difference between what the auditor is responsible for and what management is responsible for. If you're comfortable with all the sections within this chapter, make sure you've referred back to the study text and attempted any suggested questions before moving on to the next chapter.